Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday. It's March the 20th, 2012, and we've got stopped out on all markets as of now. At this point, you should not be long any of the major markets that are out there. We talked about this last week, telling you getting up there towards the overbought conditions, and now we're starting to see that breakdown, which we also talked about last Friday, I believe. The main catalyst this time around has been, or at least they're looking at the fact that you've got Asia's markets, Hang Seng markets, pulling down the rest of the markets. We talked about that as well last Friday. I'm not going to go rehash all of that. You can watch Friday's video if you haven't already seen that. Not a bullish condition on that market, not that chart, and we're starting to see a breakdown of the trend on the NASDAQ. And even though you may not see it, let me show you what we're looking at here. You've had this move to the upside, and you'll notice as you start moving up here, you've got multiple different ways you can analyze it, of course. There's first the resistance line. We'll just really draw a line out like this, all right? And then we had this pullback, and then we told you to buy opportunity. You didn't want to sell it, and so it makes us move higher. Now, we can do this multiple ways, the first of which was my method, which was to simply take the profits to test their previous high, so then I'm done. Those who stuck with it, they would simply advance their stop along the way, noticing that the low points of every candlestick are slightly higher than the next. As long as that continues to be the case, you stay with it. At some point, like we saw today, low points will be taken out. Today's low point is lower than yesterday's low point. You should be stopped out. That's the market's way of telling you the momentum to the upside is decreasing. There's no longer a need for you to stay with it. You should be letting the market kick you out. That should be the strategy. Another method of doing it would simply be take this resistance high point here down to the low, do the math on that from the breakout point, and assume that the target will be roughly this size. Well, you've already reached that target. So by any measure that you would be using quality technical analysis for, you should be stopped out of this trade, period. And that's not just the NASDAQ. It's actually around the world. We're seeing it in many markets. I'm not going to go into all of that. There's a lot of markets to check out. If you've not seen that Friday video, I really recommend you should do that. The S&P 500 Large Cap Index, this is the same story as what we've just shown you on the NASDAQ. You had the previous resistance line, you had the pullback that we talked about. You could have been a buyer here. We didn't take this one, we chose others. And then you had this distance here. You could have measured out from the breakout point for a target, roughly we've already seen. And then, of course, you can again notice low points, every one higher than the previous until today. Now you should be stopped out and not long this market. However, typically, the first time you're stopped out is not where the market actually peaks at. Sometimes it does, but most of the time it doesn't. It begins what's known as the bull trap, where it starts to trend higher, but it does so in the wrong fashion, and it's just a matter of time before she just snaps on down to reality and starts to sell off. So I expect to start seeing that. We could start selling off immediately. We've taken out the lows, and now we start selling off. That's possible, but most of the time it doesn't happen that easily. It's just simply too easy. What instead happens is we start to see a sell-off that's then bought up in this really ugly, nasty way. It starts to move higher. Let me show you an intraday chart to show you that it's already actually started. Okay, here we are looking at the S&P 500 Large Cap Index for the intraday. So you're looking at 5 days, and you'll notice that over here, let's start over here. You've got this advance here, consolidation, advance, consolidation, advance, consolidate sideways, advance, consolidate sideways, advance, consolidate sideways. This is how a proper uptrend works, okay? It advances and consolidates, advances and consolidates. That's normal. When it does this, it's just slow grind in this direction. Actually, it'll be more like that. It's actually a warning sign that this is not proper. It will continue to do this, trade within this little range like you're seeing here for a prolonged period of time, and then at one point or another it will just snap. So expect that. It's coming. This is the main thing I'm talking about when I said that the bull trap has begun. This is that bull trap right here. People will begin to start believing in it. They'll start buying it. Well, they're buying the fake. It's already broken down. The trend on the longer term, like we just showed you, it's already broken down. So what you're starting to see here is the fake. This is the thing you really don't want to be a part of. If you liked it back here, you can't like this here. It's not a pressure. We've also seen these go on for an extended period of time. So this is another thing you need to be thinking about. You're going to see, if this continues to happen, you're going to see upward moves that are going to make you wonder, am I missing the move? That kind of thing. We've already talked about that. I think it was last week we talked about the NASDAQ showing the longer term charts up there in the overbought condition on the RSI, one of the major overbought signals you can get. It's also, let me show you the longer term again on that. Okay, this is the NASDAQ, the longer term chart that I referenced a moment ago. This is actually a 2 year. I'm going to show you 2 years for a reason. 2 years and 3 months. Each one of these candlesticks represents 1 week. And you'll notice we've been on a tear to the upside. We called this buying opportunity. Everything's great. We called this little dip down here as a buying opportunity. She continues to move higher. We love all this. However, now we're getting up here to the 70 line on the RSI. When you get up there, that's where you find your overbought conditions. That's where the trouble starts to brew. You had this major situation here we talked about back when that was going on before the flash crash. Naturally, people told us, no, this time it's different, blah, 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 and it never is. Here we are again, and now we're getting up there yet again. Do I want to be a buyer at this point? That's insane. Not going to happen. Another thing I want you to bring to your attention here, 1, 2, 3, 4, 5, 6 consecutive weeks to the upside. Look anywhere on this chart. You're not going to find that. You will find, however, one case back here where you had 8 consecutive weeks to the upside just before the flash crash. There's a way markets climb, and there's a way that they fall. When they get a nice pullback situation, you start to get a series of higher lows and higher highs. Then you see a reversal to the upside coming. That's what we saw. That's what happened. Then you test the previous high. We saw that. Here we go. Now you should have consolidated here, but you didn't. You chose to advance further. You can do that, but you're just going to sooner or later have to turn around and pull back down to what? What is previous resistance now acting support, so you will fall until you find that support. So why buy up here when you can buy down here? That don't make no sense. Watch this. Remember that. Count the candlesticks here of 8 to the upside. You've got 6 now to the upside. Yes, you can keep going higher, but you don't want to be a buyer here. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Everybody out there listening right now, I'd like to increase this number right here. I'd like everybody who listens to this video today to do me a favor. Do not click the like button unless you share this video somewhere on the internet today. If you've done that, or if you were going to do that, then you can click the like button on this video. Otherwise, please don't. I want to actually see how many of you guys are actually out there supporting this free service. So I appreciate you guys' help. Thank you very much. God bless, and I will see you all tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.